Welcome back, everybody. Ready for another deep dive?
Always.
Awesome. Today, we're digging into the EQAI Morning Briefing, the one from November 25th, 2024.
Ooh, yeah, this one's packed. Stocks, crypto. They even threw in a long-range prediction. Might make you want to double-check your portfolio.
No kidding. But don't worry, we'll break it all down nice and easy.
Exactly. That's what we're here for. You know what I find interesting about this briefing, though?
What's that?
It doesn't just throw numbers at you. It actually tries to explain what's behind them.
Ooh, like a detective novel for the financial world. I like it.
Right, like how global events are shaking things up, or why one company might be like a canary in a coal mine for a whole sector.
Okay, so let's start with something that sounds kind of celebratory. The Dow Jones. It jumped almost a whole percentage point. That's going to be good news, right?
It is. But it's not just a random sugar rush. This seems to be driven by industrial companies doing really well. Think construction, manufacturing, all of that stuff that gets a boost when infrastructure projects are happening and global trade picks up.
Ah, so it's not just a blip. It could be a sign of something bigger brewing.
Exactly.
Okay, so maybe hold off on the champagne for now. But what about Bitcoin and Ethereum? They're doing this weird two-step. Bitcoin's down a little, Ethereum's up almost 3%. What's going on there?
Yeah, crypto's always got its own rhythm going on. With Bitcoin, it could be people cashing out after it went up recently, or maybe they're nervous about all the talk of regulations.
Ah, regulations, the constant crypto conundrum.
Right. But Ethereum, on the other hand, its rise could be because it's becoming a bigger player in DeFi and NFTs.
Yeah.
You know, those areas are really where Ethereum shines.
So basically, if you're thinking about jumping into the crypto pool, got to do your research. This is proof that even within crypto, things aren't all moving in the same direction.
100% agree. Different risks, different rewards, all got to be factored in.
Okay, now the briefing calls out Nvidia, the AI chip powerhouse. They say it's like a bellwether for the whole tech sector.
Ah, yes, the bellwether.
So, for those of us who didn't go to Wall Street jargon school, what does that even mean? Why is Nvidia so important?
Okay, so think of a bellwether, like the leader of the pack, the one everyone else follows.
The trendsetter.
Exactly. NVIDIA's chips are like the brains behind a lot of tech right now. Cloud computing, gaming, even self-driving cars, they all rely on those GPUs. So if NVIDIA is doing well, it could mean the whole tech industry is healthy.
Okay, so it's not just as simple as Nvidia's stock goes up, everyone's happy. What should we actually be watching for in their performance to get clues about where tech is heading?
That's a great question. The key thing to look at is their earnings reports. If they start saying things are slowing down, or if demand for their chips weakens, that could be a warning sign for the whole sector.
Especially for companies that depend on those chips, right? Nvidia sneezes, they catch a cold.
Yeah, it's like a domino effect. Not always that dramatic, but it shows how interconnected everything is.
Okay, so this is getting kind of scary, especially since, a lot of people have their investments in tech.
Right, it's definitely something to pay attention to.
All right, well, speaking of things being interconnected, let's talk energy. The briefing mentions this upcoming OPEC Plus meeting, and it's happening online.
Yeah, that is interesting.
So why is this meeting a big deal? Why should we care what a bunch of oil-producing countries decide, especially if they're just doing it on Zoom?
Well, think of OPEC Plus as the group that sets the rules for how much oil gets pumped out globally. So they have a huge influence on oil prices. And oil prices, they affect everything. How much we pay at the gas station, how well energy companies are doing, it all trickles down.
So even if we don't own a single share of an oil company, we should still be paying attention.
Absolutely. And meeting online, it's unusual. It makes you wonder if they can really hash things out as effectively through a screen,
Yeah, good point. Especially with all the geopolitical tensions right now. I mean, the briefing mentions the Russia-Ukraine conflict, and that alone is making oil prices pretty jumpy.
Exactly. It's a lot of uncertainty, and it's all playing out in this virtual meeting room.
Okay, buckle up, everyone. Oil prices are in for a wild ride. But you know what else might make our wallets a little nervous?
What's that?
This model the briefing talks about, the value line's median appreciation potential. Apparently, it's got a good track record, even predicted the 2022 bear market.
Oh, yeah, that's a pretty well-known model. It's definitely one to watch.
Well, right now, it's flashing a dead cold sell signal for the next 3 to 5 years. Should we be heading for the hills?
Whoa, hold on. It's not quite time to panic, but it's definitely a warning sign. Basically, this model is saying the market might be in for a rough ride for a while.
So more like reevaluate everything, then sell everything.
Exactly. It's a reminder that market cycles happen. What goes up usually comes down at some point. So it's all about being prepared. Maybe shifting some investments toward those defensive stocks, the ones that tend to hold their value even when the market gets shaky.
Okay, good advice. But how do we actually do that? Let's get specific, break it down by sector. This briefing dives into a few of them, and there's some good stuff in there. Starting with tech. Everyone loves tech right now, right?
Mm-hmm.
AI, cloud computing. It seems unstoppable. But are there cracks in that shiny facade?
Well, the long-term outlook for tech is still pretty bright, but there are a few things to keep in mind. Governments are starting to get more concerned about data privacy and whether some of these tech giants are stifling competition.
Ah, so regulations could rain on the tech parade a bit.
Potentially. It's not a done deal, but it's definitely something to watch.
Okay, so maybe tech isn't the guaranteed slam dunk it used to be.
Hmm.
What about energy? Seems like they're in a tough spot right now, trying to balance the whole oil and gas thing with this big push toward renewables. What's your take on where energy is heading?
Yeah, it's like watching a tug of war in slow motion. On one side, you've got the shift toward renewables, which is definitely gaining momentum, driven by, well, everything. Climate change worries, governments offering incentives to go green, even just consumers demanding cleaner options.
Right, the world's definitely feeling the urgency.
Exactly. But on the other side, you've got oil and gas. They're still major players. And these recent geopolitical events, like the one we talked about, they've kind of shown us that we're not kicking that dependence anytime soon.
So energy is kind of stuck between a rock and a hard place, or maybe I should say an oil well and a solar panel.
Haha, yeah, something like that. It's a sector full of both opportunity and risk. It all depends which side of that energy tug of war you're betting on.
Okay, good to know. Now, last but not least, let's tackle the financial sector. Banks seem to be pretty happy right now, mostly because interest rates are up. But are there any storm clouds on their horizon?
It's not all sunshine and roses for banks. Higher interest rates do mean they can make more money from lending, but when the markets get volatile, their investments can take a hit.
Ah, so it's a double-edged sword.
Right. And then you've got this whole fintech wave happening. New tech companies trying to change how we bank, and traditional banks are trying to keep up.
It's like they're trying to dance to a new beat, and some of them are tripping over their own feet.
Pretty much. So, yeah, it's a sector in transition, lots of uncertainty.
Okay, so basically, don't assume any sector is a guaranteed win, even if the headlines sound great.
Exactly. Always got to dig deeper.
Words to live by. But what about beyond our borders? What's the vibe on the global economic outlook? Is everyone bouncing back from the pandemic at the same speed?
Not really. It's kind of all over the place. The U.S. seems to be doing okay, but we've got this stubborn inflation that just won't quit.
Tell me about it. Grocery shopping is a contact sport these days.
Right. And then Europe's being a bit more cautious, partly because they're really feeling the energy crunch from the whole situation with Russia and Ukraine.
Yeah, that's got to be tough. And what about Asia? They've got some heavy hitters over there.
Yeah, you've got China dealing with some of their own challenges. Like their property market is cooling down, and the government's been cracking down on certain industries.
Lots of changes happening over there.
Definitely. But then you've got India, which is booming right now. Young population, embracing tech, government reforms. They've got a lot going for them.
So globally, it's a bit of a mixed bag. Some up, some down. Makes you wonder if that dead cold cell prediction from the value line model is taking all this global stuff into account. I mean, it's a US-based model, right? Could it be missing part of the picture?
It's a good question. Models are tools, not crystal balls, you know? They're great for spotting patterns and potential risks, but they don't capture everything. That's why it's so important to not just look at the numbers, but to understand the stories behind them.
Like we were just talking about, right? The global economy is complex. Different regions facing different challenges and opportunities.
Exactly.
So even if that model is pointing towards a potential downturn, there might be bright spots elsewhere in the world that could balance things out.
Exactly. That's why diversification is so key. Spreading your investments across different regions and asset classes can help smooth out the ride, you know? It's like having shock absorbers on your portfolio.
I love that analogy. So even if things get rocky in the U.S. market, having some exposure to, say, India's growth story could potentially soften the blow. But speaking of diversification, beyond just looking geographically, are there specific sectors that stand out as being particularly resilient, maybe even ones that could benefit from a downturn?
Well, healthcare often gets mentioned. People still need medical care no matter what the stock market's doing, right? So historically, healthcare companies have been seen as a bit of a safe haven during market storms.
Yeah, that makes sense. But healthcare doesn't exactly scream high growth potential, does it? What about for those of us who are a little more adventurous with our investments? Are there sectors that offer both growth and some level of protection from market swings?
One area that comes to mind is clean energy. We already talked about the transition to renewables, and that's only going to accelerate. Companies involved in solar, wind, battery storage, all that good stuff, they're positioned for some major growth as the world gets serious about going green.
Right. It's not just a trend anymore, it's a necessity.
Exactly. And because this transition is being driven by so many factors, government policies, technological advancements, even just consumer demand, it's less likely to be derailed by a short-term market dip.
So it's like riding a wave that's being pushed by multiple currents, making it a much stronger, more sustainable force.
That's a great way to put it.
I like it. But shifting gears a bit, I'm curious about what the briefing had to say about the types of assets people might want to consider. We've talked a lot about stocks, but are there other things that investors should be thinking about, especially if we're heading into potentially choppy waters?
That's where those alternative assets come in. Things like real estate, commodities, gold, silver, even agricultural products.
So going beyond the usual suspects.
Exactly. They tend to move differently than stocks, so having some of those in your portfolio can provide balance. It's like diversifying.
So it's like having a multi-layered safety net. Okay,
Yeah.
that makes sense. But with so many options, so many moving parts, how do we actually filter all this information and figure out what moves to make? It's a lot.
It definitely can be. And that's why it's so important to not just rely on one source of information.
Hmm.
Read different analyses, talk to financial advisors if you have access to them, do your own research. The more perspectives you gather, the better.
So don't put all your eggs in one basket, and don't get all your information from one source either. Spread it around.
Exactly. The more informed you are, the better decisions you can make.
And don't forget, that's what we're doing here on the Deep Dive, helping you sift through the noise and find those golden nuggets of knowledge. But, let's be real for a second. All this market stuff can be pretty heavy, especially when we're talking about potential downturns and dead cold cell signals. Need a little humor break?
Sure, always up for a good laugh. What do you have?
Okay, picture this. You're at a financial conference, everyone's in their suits talking about market trends and blah, blah, blah. And suddenly this guy runs in, throws a stack of charts in the air and yells, "Sell everything! The sky is falling."
Oh man, I can just imagine the panic.
Right. But then, just as everyone's scrambling for the exits, he bursts out laughing and says, "Just kidding. I just wanted to see if anyone was paying attention."
Okay, that's pretty good. But in all seriousness, that kind of knee-jerk reaction is exactly what we don't want people to do.
It's about staying calm, being informed, and making rational decisions. Don't let fear drive the bus. But speaking of driving, let's circle back to those expert predictions for the future of specific sectors. Where do the analysts see things heading, beyond just the tech dominance and green energy wave we've already talked about?
Well, one area they're keeping a close eye on is the financial sector, especially with all that fintech disruption we discussed. They're saying that traditional banks will need to evolve quickly if they want to stay relevant. Think partnerships with fintech companies, embracing new technologies, basically becoming more agile and customer-centric.
So it's not just about surviving, it's about thriving in this new landscape, right?
Mm.
But what about the global picture? Any predictions about how those different regional economies we talked about will play out?
The analysts seem to be cautiously optimistic about the U.S., but they're definitely flagging inflation as a key risk to watch. They're also highlighting Europe's energy dependence as a major vulnerability, especially with the ongoing conflict in Ukraine. And when it comes to Asia, they're basically saying it's a two-horse race between China and India, each with their own strengths and weaknesses.
So lots of moving pieces on the global chessboard. But what about those wild cards, those unexpected events that can throw everything off course? Any predictions about what might be lurking around the corner?
Of course not. If they could predict those, they'd be sipping margaritas on a beach somewhere, not writing market reports. But they do emphasize that geopolitical risks are at an all-time high. Think about it. You've got tensions simmering in various parts of the world, climate change throwing curveballs, and who knows what else is brewing beneath the surface.
So it's like we're sailing in uncharted waters, with the potential for both smooth sailing and sudden storms. Sounds kind of exciting, doesn't it?
It definitely does. But remember, even the most experienced sailors rely on their knowledge, their tools, and their instincts to navigate choppy seas. And that's what we're doing here, equipping our listeners with the insights they need to chart their own course through the complexities of the financial world.
Okay, so we've covered a ton of ground today, from market trends and sector analysis to global outlooks and even a few laughs along the way. But I feel like there's one big elephant in the room we haven't fully addressed yet, that value line prediction. It's been looming over our conversation like a storm cloud.
You're right. It's a reminder that even amidst all this talk of opportunity and growth, there's always an element of risk in the market.
So how do we reconcile these seemingly contradictory messages? On the one hand, we've got this positive momentum in certain sectors, but on the other, we've got this ominous prediction hanging over our heads.
That's the million-dollar question, isn't it? And it's one that each investor needs to grapple with individually based on their own circumstances, risk tolerance, and investment goals.
So instead of trying to provide a one-size-fits-all answer, let's shift the focus to what our listeners can do to navigate this uncertain terrain. What actions can they take today to prepare for whatever lies ahead?
That's a great idea. Let's empower our listeners with some actionable steps they can take to feel more confident and in control, regardless of which way the market winds blow. Ready to dive into that?
Absolutely. Let's give our listeners the tools they need to turn knowledge into action.
All right, so let's get practical. We've talked about those potential storm clouds, but instead of just worrying, what can people actually do to prepare their portfolios?
Yeah, where do we even start?
Well, remember that diversification thing we talked about? If you're super heavy in just one sector, like say all your eggs are in the tech basket, maybe it's time to branch out a bit.
Don't put all your eggs in one basket, got it. Especially if that basket's looking a little shaky.
Right. And remember those defensive stocks we mentioned, companies in areas like healthcare, consumer staples, things people always need no matter what the economy is doing. Those can help cushion the blow if the market takes a dip.
So, like, even if things get rough, people still got to brush their teeth and go to the doctor.
Exactly.
Okay, so diversify, check. But it's not just about which stocks you own, right? There are other types of assets that can help weather a storm too, aren't there?
Absolutely. This is where those alternative assets come in. Things like real estate, commodities, gold, silver, even agricultural products. They tend to move differently than the stock market, so they can help balance things out.
Ah, so it's like if the stock market's doing the jitterbug, these other assets might be waltzing, and your portfolio doesn't get totally thrown off balance.
Haha. Yeah, that's a good way to visualize it.
Okay, so we're building a portfolio that can handle a few punches. But let's be real. For a lot of people, investing can feel super intimidating. There's so much jargon, so many options, it's easy to get overwhelmed. What advice would you give to someone who's feeling lost in the market maze?
Totally get it. It's a lot to take in. My advice: take a deep breath and start with the basics. Before you even think about specific investments, figure out your own risk tolerance. Like, how much are you actually comfortable losing? What are your financial goals?
So get to know yourself before you jump into the deep end.
Exactly. Once you have a clearer picture of your own needs and comfort level, it's way easier to filter out the noise and focus on investments that actually make sense for you.
So it's about tuning out the hype and figuring out your own investing style. Kind of like you wouldn't wear clothes that make you feel uncomfortable. You shouldn't invest in things that keep you up at night.
100%. It's all about finding that sweet spot where you feel confident and in control.
Okay, confidence, I like it. But what about resources? There's a ton of information out there, some good, some not so good. Where can people go to learn more, to get reliable advice, especially if they're just starting out?
That's where doing your homework comes in. Don't just rely on one source of information. Read books, articles, check out reputable financial websites, talk to financial advisors if you have access to them, and don't underestimate the power of community.
Oh yeah, the internet can be a surprisingly good place for financial advice if you know where to look.
Exactly. There are tons of online forums and groups where people share their experiences and knowledge. It's like having a whole team of mentors in your pocket.
Love it. Building your own personal finance dream team. But even with all the right information and resources, the market can still be, well, a little wild and unpredictable, right? We can't control everything, can we?
Nope. If we could predict the future, we'd all be on a beach somewhere, not talking about this stuff. But what we can control is how we react to uncertainty. Instead of panicking when the market dips, remember that volatility is normal. It's all part of the cycle.
So it's like being on a roller coaster. You know there are going to be twists and turns, but you trust that you'll eventually get off safely.
That's a great analytical. And remember, you don't have to write alone. Talk to friends, family, financial advisors, whoever you trust. Sharing your concerns and getting different perspectives can really help you stay grounded and make better decisions.
It's like having a support system for your investments, which makes sense, right? We have support systems for all kinds of things in life. Why not our finances? Okay, so to wrap things up, what's the one big takeaway you want our listeners to walk away with today?
Knowledge is power. The more you understand about the market, the more confident you'll be in making decisions and achieving your financial goals. So don't be afraid to ask questions, challenge assumptions, and seek out different perspectives.
I love that knowledge is power. So true. And remember, this deep dive is just the beginning. Keep exploring, keep learning, and most importantly, keep asking questions. Who knows what we'll uncover together in future episodes?
Until next time, happy investing.
And that's a wrap on another deep dive. We'll catch you next time, ready to explore another corner of the world of knowledge.